All right, so let's get cracking. We're going to discuss a strategy of using the web analyzer, but we want to be able to manage our risk properly. I mean, one of the things in trading that's very, very important is risk management, having your stop losses at a decent way away, but having a stop loss at a good way away that you could still make a decent profit when the market moves in your direction, right? So I'm going to show you this strategy using Pitchforks, using the RSI and Bollinger Bands for, and the web analyzer as well, for managing your risk properly, but also making money when it goes in your direction. So we're always risking no more than 2% of our account, and we want our stop losses to be 5 pips, 5 pip stop loss. And I'll show you how you could achieve that. So let me share my screen with you for a minute. Share my screen. Okay. I'll pull up this web analyzer here. And I probably need to just minimize this a bit so you could actually see. Okay, so this web analyzer has been on since this morning, and this GBP USD pair has been on since this morning. And that was a call at let's see. We had a buy at about 11:30 this morning. So if I scroll down to about 11:30, right, just around here, buy GBP USD at around 11:45. That was the time. Okay, so that trade would have come in, and at 11:45 GBP, it would have been sitting just around here. The price would have been just around this mark, right? What I do is I wouldn't have taken the trade because the price would have left the Bollinger Band too much, but I start drawing pitchforks on, so I start drawing pitchforks on my chart. So say for example, I would erase, let me just erase these 2 pitchforks for now. Erase that one, erase that one. Now, if you haven't seen Steve Greger's Pitchfork course yet, I strongly advise you to get on your iMarkets Live TV and check out that course. He has a free course, and the course is about 8 hours long, several videos, and it will teach you specifically how to draw your pitchforks properly, and then what certain things mean. At the moment, I'm not showing you what it means. I'm just showing you how you could actually use it once you get the knowledge, and you could use it with the web analyzer. So for this GBP USD pair, the price would have been like that this morning, okay? So I would take this pitchfork and I draw it as taught by Steve Greger. Swing high, swing low. All right, and I'm gonna swing this up so that I have a touch on. Okay, so that's me. I'm set. This fork is set for me to start taking some trades if I see possible bounces off of what do you call the outer parallels or the median line or the Fibonacci. When you do the course, you'll see what I'm talking about. And literally, you could stick with this pair all day and just take trades off of the bounces of the forks. So the trade was called. Whoever is doing that, please don't be marking. Okay, that's very disturbing. All right. Could you erase that, please, if you put that on? Thanks. Okay. So the pitchfork is on. The pitchfork is set. There is a bounce off of the pitchfork here, off of this line, and there's also a bounce off of the Bollinger. So you could have taken that trade if you had the pitchfork set, and literally you just set your stop loss 5 pips from that entry point. 5 pips right there. That's how tight you could keep your stop losses if you're able to use the pitchfork effectively. Again, the price went up. You would have probably taken some profit. Eventually, it got to this stage and it started pulling back. And then you see here, it hit the pitchfork again on this line. And also it hits the Bollinger Band and it went up for a small buy. But then it hits the pitchfork on the outside again. So that's another trade that you could have taken for a sell. I mean, and it doesn't seem like, remember, we only go in for a small amount of pips. So it's like five pips or so. So if I measure, how many pips is that from there to there? That's 10 pips. So all we just going for is 5 pips. 5 pips stop loss, 5 pip take profit. 1-to-1. So if you lose one trade, you just need one trade to make up for it. Again, when it hits the outer parallel here, you could have taken another trade right there. 5 pip stop loss again. You see how clinical this is, and it would have dropped and hit this parallel. Yeah, that dropped for 14 pips, but then again, you only going for 5 pips. You could have gone for 10 pips if you wish, but we only looking for 5 pips every time we trade. And again, it keeps going, it comes back out, it hits our outer parallel again, and you see how to the pip it hits these outer parallel. I've set that fork way up here. I didn't even see any of those prices, but you could see how the price moves and hits the pitchfork for some nice trade setups. When it breaks here, you could have waited for it to come back, touch on the outer, and go on up. Again, we could have set another pitchfork here. So if I draw another pitchfork from this high to that high, and we could have swung it around to suit our prices. So say, for example, probably about there would have been a good way to set this pitchfork. And let's see whether we have any more hits on this pitchfork. Okay, so as price moves, you could swing your pitchfork to suit price so that you get some more data points, if you want to call it that. Okay, so we could have a hit here, then we've got a hit up there, we've got a hit just right in the middle. But you've got to go through Steve Greger's pitchfork course to be able to learn how to set your pitchforks properly, to be able to know when to enter the trades and all that. So if you are a part of IML, make sure that you check out Steve Greger's pitchfork course. If you're not a part of IML, you could connect with the person that sent you to this video, or just connect with me and I'll let you know how you could get into the system. Does anyone have any questions at all before we check out some of the trades that's coming in? You could unmute yourself and ask any questions.
Olay, what type of candles are those?
Oh, all right. Instead of candlesticks, I just went for these bars. So you could use candlesticks, it's fine, or you could use
like bars better for some reason.
bars. I just find it better to see the hits, especially on the web analyzer, for example. I can't see the wicks properly with the candles here. If you see it, it's difficult for me to see the wicks, so that's why I just set that bar on there, so you could see exactly where the bar ends.
Hey, Alex, Bobby, can you hear me?
Yep. Yes.
Quick question. I was doing the McGregor course, module 2. I haven't completed it. But doesn't he need to be anchored to one of the candles?
Go again?
Doesn't he need to be anchored to one of the candles? Like if you go down to the, I don't know how to explain it. If you move your arrow of the hand, if you move it just down a bit more, down to the A, this one. Doesn't it need to be connected to that red candle? I know.
It doesn't have to be. Now, if it's connected to this red candle here, right, you call that a traditional pitchfork.
All right.
All right. And a traditional or predictive pitchfork. But if the price moves and it doesn't have any hits on your pitchfork, like for example, it doesn't really have any nice hits on any of these lines, then you could move it around to become what is called a best fit pitchfork. Right? So you can move so that price hits a line, and what you want to see is like the price hitting the median, a price hitting the outer parallels. If you get things like price hits on those, then you'll be more or less comfortable with the pitchfork that you set. So
okay. One more question. So imagine the call comes in to sell, for example.
Yep.
You can't use the pitchfork straight away. Is it something you've got to use prior to the call being made?
Yeah, you could. Yeah, so you could set these pitchforks. So, for example, I'll give you an example here. If I erase this one.
Because the reason why I'm asking, it wasn't clear on his call, or maybe I didn't understand how do you actually utilize the pitchfork. I bear in mind that I'm just on module 2, so I wasn't understanding how do you do it when a new trade alert comes in, for example. That do I just bring up the pitchfork and just mark it and see what's going to happen?
Right. Okay. So you set your pitchfork, and you've got to have some sort of data point. So in this case, we'll have a data point here, meaning it hits the outer parallel there, and also it hits this Fibonacci here. So you would not have taken this trade, for example, from the web analyzer. However, the web analyzer did call a sell on GBP USD a bit further back, and this pitchfork would have been set. So you would have been able to take this trade, or you would have been able to see that this trade was coming even before the web analyzer said that there was going to be a trade.
So the best thing to do is bring up a couple of pairs up and set your pitchfork, and then wait for the call, and then see how the day is flowing.
That's right. Now, when you start, when you go further into the course, because you said you only on module 2, but when you get down to like module 6 or so, he'll explain how you take trades, or when you take trades. But
right, okay.
And also you just follow him on IML TV as well, so you get an understanding of how to be able to take trades.
Okay, brilliant. Thank you.
Okay, so what is it, this one? GBP USD. I'm just looking for the trade that was called and see whether we could match it up with the pitchfork itself. So we okay, that is buy. I don't know why it always does that. It jumps back. Okay, there it is. So it says potential sell GBP USD 1235, right? That was called. So if we would have seen here at 1235, it was calling a potential sell. But when you've got that pitchfork in place, then all you just do is wait for it to touch, and eventually what happened, it did eventually touch your pitchfork and then went off for a little sell. So the pitchfork would have been in place before the web analyzer even called the trade. And you could literally stay with this one pair all day, just off of this pitchfork, and trade this one pair.
Vale?
Yes, sir.
Just the one question.
Sure.
Is it safe to enter the trade if it hits the pitchfork without all the other confirmation from the web analyzer? Am I right to say that?
Well, it depends. So if you have other confirmations, like for example, if you got a Bollinger Band hit as well as a pitchfork hit, or if you're using the MACD and the MACD is giving you something, I don't really use the MACD, or if you're using some other indicator and you get additional confirmations, so you have the pitchfork confirmation and you've got, or for example, if you've got the RSI and the RSI is in overbought or over full state, if you get that additional confirmation, then you could take the trade without the web analyzer giving it to you.
Yeah, because looking at this at 12:35, the other confirmation were not met, but it hits the pitchfork itself.
Yeah, that's right.
So would you, I mean, I'm just thinking whether it would be safe to take the trade because the pitchfork is kind of accurate.
Yes, the pitchfork is very, very accurate. So is this trade you're talking about, isn't it?
Yeah, there.
This one.
Yeah.
Okay.
So it's hit, yeah.
So it didn't necessarily hit the Bollinger Band perfectly.
No, it didn't.
It didn't necessarily. The RSI isn't.
It didn't hit the RSI either. No.
Yeah, that's right. The RSI is no. So you could leave the trade alone. You don't have to take all the trades, you know, and just wait for another, or wait for a better one that would suit your confirmations.
Okay.
Yeah.
Thanks.
Any other questions?
Some more examples would be great, Vale.
Go again?
Some more examples would be great. To just clear up the screen and just start again.
Sure. Let me pull up this latest Euro JPY. Okay. So with this Euro JPY, again, you could start just setting your pitchfork based on a very small swing high and swing low just right here. Okay. And swing your, well, let's try it. Well, yeah, that probably wouldn't work. So we'll have to try and do a best fit. Okay. Right. So we have a hit at the top.
Sorry to interrupt you. It's me, Bob, again. Sorry to interrupt you. Just to confirm, you're actually moving the fork so it's like a trend line. You're trying to get it into that angle. You're trying to get into that channel. Is that right? Is that what you're doing? Is that what you're trying to make a best fit? Is that what you mean by best fit?
No, best fit meaning that there would be a hit on one of the parallels and probably one of the medians as well. So if I just switch that up a bit, you could see that we've got a hit on the outside here, we've got a hit here, we've got a hit here, we've got a bit of a hit here, we've got a hit here. So that is a good enough pitchfork for me to be able to now wait and see whether a trade comes in. Now, it said at 8 o'clock that there's a possible sell on the pitchfork. A possible sell on the web analyzer. So at 8 o'clock here, you just monitor it, have a look. Right. So it would be a trade that I wouldn't take because, well, one, the volume just based on the compression of the Bollinger Bands is very, very small. So In fact, now is not really a good time to be trading, just because the New York session is kind of coming to an end. But we've got a fork here that you could actually leave on the chart, and as price continues to move, especially, well, this is an Asian, because it has the Japanese yen in it. And when the Asian market opens, it will move in some way, and you can just monitor this and see how price reacts with the pitchfork. See whether you get any trades, your other confirmations as well, your RSIs, your Bollinger Band hits, things like that. Okay. You could also do a downward fork. So have two forks on. Okay. You could have two forks on the chart. This is just a traditional pitchfork. And again, you'll have to check out the course to understand the merits and values of what the traditional offers and how to draw the traditional pitchfork and all that. But the value in the pitchfork is being able to have a very tight stop loss. And the tighter your stop loss, you could risk the same percentage and gain more when price goes into your favor. If you understand what I'm saying. So say, for example, if you have a 10 pip stop loss and you're risking 2% of your account, to be able to gain 2% of your account, it has to go 10 pips into your favor. If you have a smaller stop loss, 5 pip stop loss, to be able to gain 2% of your account, then it just only, the price only needs to go 5 pips into your favor to be able to get, or to be able to gain 2% of your account. And say, for example, you could turn 1,000 pounds or US dollars into $1 million over a year's period if you're able to trade and get 3% of your account every day. So to get 3% of your account every day using tight stop loss, then say, for example, a 5 pip stop loss, then all you need is 2 trades at 5 pips per day to be able to gain 4% of your account. And if you're able to do that over time, then you could build up your account without much trading, to be fair. Any more questions?
Yes, fine. It's me, Bobby, again.
Yes.
Right. So if you know about the 16:30 hour, if you could just move your cursor by 16:30 hour, you see that big red line there coming more to your right? Yeah, up right there. Yeah, up a bit. You see that candle, the red one? Yes, the other one on the right, a bit more of the finger. Or well, my right. Yeah, yeah, right there.
This one?
So, yeah. So when it hits that line, the I think that is the middle meridian. Is that what they call it?
Hold on, let me just erase one of them.
Yeah. So it didn't actually really touch that line at the top, the purple line, did it? So
this one of them did. I mean, one of these, this green candle did, but this red candle did. This one right here.
Oh, right. Okay, now I can see it. Yeah. Okay.
Yeah.
So that's when you would say. Is that
it
when
touched
you
it.
It touched it, so it's a good sell.
Well, you've got to also look for your confirmations as well. And to be fair, in upward facing forks, you shouldn't really look for sells at the top. You should look for sells possibly at the median here or at the bottom. So say, for example, at this medium line here, that would have been a good buy, for example. So upward facing forks, when you're just starting off, the reality is that you could take the trade when you get a greater understanding of how the pitchforks work. But when you're just starting off, I encourage you to just take trades on buys. So, for example, here, of pitchfork is facing up, so you take a buy trade on the median here, or if there was an outer parallel hit, you take a buy there. you would more want to take a sell if you had a downward facing fork, probably one a bit further back this way. The beautiful thing is that you could use this price data here to draw your forks in. So let me just try to put a fork in here and see whether it would have hit a bit further down. So we've got a hit here, we've got a hit on the outside there. Let's see whether it hits. Well, the fork wasn't big enough, but you could actually do things like cloning your fork and offset it. Now the Pitchfork course is okay, so still not really any decent hit there. Okay, the Pitchfork course is quite intense in terms of being able to understand it. Is a bit more advanced, but when you do get to understand it and understand the power, you would see the real benefits of being able to learn this Pitchfork method.
I'm on module 2 and it seems really intense.
it is. However,
I think it's made for people like you who are ex-engineers or something like.
No. You just put a little work in, and once you are part of the community as well, be a part of the community on Facebook, and also make sure you log into the live sessions, and you could ask Steve Greger any questions when he goes through the live sessions, and also look at the recordings. You'll be able to catch on quite quickly and just practice this Pitchfork trading. Yeah. Okay. So this is just one out of thousands of methods that we could use to use the web analyzer to trade. And it's very, very effective once you're able to use Pitchforks well. And then you could marry Pitchforks with the fork confirmations. You could marry Pitchforks with RSI, Bollinger Band hits, all the other strategies that we've got on the Web Analyzer Facebook group. Whichever, and the most important thing as well for you as an individual is to develop a trading strategy that suits you, your time, the time that you have to look at charts. And once you're able to demo it first and master it, once you demo it and master it, then you're ready to go live and trade. Just be comfortable in your trading. Shouldn't be afraid to place trades whenever the opportunity arises based on your trading style.
That lets me bob again. Somebody's asking, does this work in cryptos as well?
Yes. So let me show you this, because I have been trading cryptos. This is Bitcoin, and these are my Pitchforks here on Bitcoin. So you could see I had a Bitcoin hit right there. There was is so good on cryptos, is unbelievable. That's a perfect hit right there today. I took that sell today. Stay on me. Okay, we had a hit here. Look, you could see prices going up in this direction, and it's not a perfect hit up there, but you could see that we had a hit on one of the Pitchforks here for a buy, and this was on Bitcoin, and also on Ripple. If I can move this to the side, what's going on? Okay, and this is my Ripple chart. Again, we've got perfect hits. So for example, I've got a Pitchfork here. I had a perfect hit here earlier today, and that was a buy. There's a perfect hit here this afternoon, and that was a sell. You know, and it married up with my RSI. You know, this buy down here married up with Very good. Okay, yeah. So this sell married up with my RSI here for, it was over 70 overbought. We had a nice perfect hit and it dropped off. So it really does work with cryptocurrencies as well. And you could take the same settings from the web analyzer and stick it on your trading view charts or your MetaTrader charts and use it in a similar way. Here again, that was another hit on a pitchfork that was drawn far. So you see that pitchfork was far away, but price came back up and interacted with it right here, and then we had a drop off again.
So, Bali, are you using a certain take profit and stop loss on those cryptos, or are you just kind of gauging it?
With the cryptos, yeah, is the stop loss will be tight, but in terms of take profit, I don't go with a take profit. I don't set a take profit in. I'll just wait for the charts to do its thing, and then I would close the trade off manually.
Okay.
Yeah. Okay, but in terms of exiting my trades, what I actually look for is going out of the Bollinger Band here. I knew it's gonna go down for a sell. I'm looking for it to get to this median line here, and when it gets to that median line, then I'll take my profit and come out. Again, here where we have a Bollinger Band hit, and also it hits that pitchfork, I'm waiting for it to more or less get to this middle line, and then I'll take my profit and go. And if you trade in cryptocurrencies, you know that is probably about 100 times more the profit than Forex.
Oh my gosh.
Yeah, it's crazy. So if you put a lot size of 0.001 in, it's like having a lot size of 1.0 on Forex. So you got to be careful with your risk management as well when it comes to trading cryptocurrencies.
So right now, Bali, you're doing one entry per trade. Do you see yourself doing multiple like you normally do? Like once you get the hang of it?
When we get the hang of it, we'll probably do multiple entries so that we could take profit on one, and then we could move the stop loss in and leave the other one to run.
Yep.
So, but I'm really liking the cryptocurrencies.
Yep.
I'm really liking the cryptocurrency. And
with cryptocurrencies, it seems like you would meet our annual challenge goal in 52 weeks versus 12 months.
No. You mean in 52 days?
52 days, yeah.
Oh yeah, 52 days. That's what I meant. 52 days. Yeah.
Yeah. It is very, very possible. Very, very possible. The only thing I really haven't worked out yet is calculating pips for Bitcoins or Ripple.
Yeah, I was going to ask about that, including because the spreads, they look a bit, they seem on the high side.
But in terms of the movement of the currency, though, it moves very, very quickly. So by the time you worried about the spread, it's gone.
For instance, on JFX, Bitcoin versus the US dollar.
Yeah.
4,620. So I don't really understand.
But what I'm saying, Owen, is when the price moves, it moves probably about 10,000 something in really, really quickly.
Right. Okay.
So that spread, I'm not even worried about that.
Okay. I think it's equivalent to trading like a standard or a double standard, like a 10 or
like a 10,
20.
Probably,
yeah, because once you and what you got to understand too is that once you're in profit, right? Whether you're at a 0.1 or a 1.0, once your buy or sell line goes above your entry, you're in profit. So regardless of how wide that spread is, it closes the gap pretty quickly.
It does close the gap very, very quickly.
Yep.
Okay. And then
as long as you make the right call, you're good.
You just don't want to be on the wrong side of it.
You know what I mean. Well,
so this is why these pitchforks are helpful. This is why the RSI is helpful. This is why the Bollinger Bands are helpful as well. So you've got to have several things to aid your confirmations.
Okay.
All right. So, guys, I just want to encourage you to get on that Pitchfork course and study it, because it's very, 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 very valuable. And you're paying for the services as well, so you may as well get the knowledge. And you could add that to your trading hat, if you want to call it that. Cool.
Thank you.
Cool.
All right. So happy trading. Let's go and make that million this year.
Yeah.
But Violet, before you go, somebody's got a question. What time frame do you trade on crypto?
I would either do 5 minute or 15 minute. Yeah. So at the moment we're looking at a 15-minute chart right here. I would usually draw my forks out on the 5-minute chart and then switch between 5 and 15. Especially I'd like to see my RSI on the 15-minute above a 70 mark. And I would love to see a nice hit, like this one today, a nice hit on one of the Pitchfork lines for a confirmation of a sell. And that's exactly what happened. So that was good by me.
One more question. Just looking at one of your pitchforks, more towards the left, about underneath. Yeah, right. That's that one there. Yeah, actually, that one there.
Hold on. That is probably nothing. I can probably.
Oh, okay.
Hold on.
Right.
Let me just.
Okay.
Yeah. That's nothing. Let me erase that so that doesn't confuse anybody. Right. Yeah. There you go.
Yeah.
So that's better. So you can see I had several pitchforks going. This one, there was a bit of a hit here, but it didn't really give me many trades. This pitchfork, this latest pitchfork here,
that pitchfork you're on right now. If you went to the left of it, you see all those my left, sorry, which I guess is your the other left, other way. Yeah, right. Yeah, go down a bit. See that red, the cell there? You could have drawn a pitchfork there as well, couldn't you?
Yes, I could have drawn a pitchfork right here.
Yeah.
So, but it could be once is a swing low and a swing high, then.
Right. Yeah.
Yeah.
Okay. No,
choose a swing low, swing high, and then you'll be okay.
You could choose anyone you wanted, obviously. Yeah.
Okay. Yeah. That's right. That's right. More or less choosing anyone I want.
Oh.
Mm-hmm.
Thank you.
No problem. All right. So happy trading, everybody. Let's go out there and get that dash.
Yes, sir. Thank you. Thank you, guys.
Thank you.
Thanks, Bally.
Thanks, Bally.
You're welcome. All right. Boom, boom.